All right, we'll go ahead and get started today. Thank you for joining us on Zoomed In on Real Estate for January. As we did last year, we'll be doing every other month so the next one will be in March. And I was actually talking this morning, I think we'll try to put the next one together on what's happening in the insurance market on the Cape, because it is really bad right now for homeowners and condo associations to find policies and the rates they're getting hit with. So we're going to dive into that on the next Zoomed In on Real Estate in March as well. But a couple things coming up. We have our upcoming virtual CE schedule for the virtual CE that we do twice a month. In February, we'll have Code of Ethics. So this is a renewal year for the Code of Ethics training. If you have not taken it in the last 2 years prior to this, you have take it this year. So February 6th is Code of Ethics online webinar, live webinar. February 28th, we have buyer agency. March 12th, contract law. And March 21st, understanding flood zones in real estate. So take a look at those upcoming CE classes. And if you have your license renewal coming up or the class just interests you, sign up and get educated on that stuff. And then our in-person CE schedule for the first half of the year, we've got 2 classes in March. On March 28th, technology and real estate brokerage and due diligence and seller representation. And then May 8th, we'll have 2 classes as well, understanding agency and disclosures in transactions start to finish. And those 2 are both the base core classes for the Cape Cod Real Estate Specialist designation. If you're interested in getting that, those are your core classes there on May 8th to take those. So a couple in-person CE classes coming up as well. And then our upcoming MLS training schedule. We've got several quick dips once a week for a while. We got quick dips on quick stats, webinar on CartoFront, which is kind of stuff, tool in our MLS that gets you a quick flood insurance quote and click a button, but they'll talk a little bit more about flood insurance on that webinar as well. And then the latest MLS news, when you heard the news, the latest updates we made in the MLS system will be on February 15th. Remind Docs Plus training on February 20th. And then at the end of the month, kind of benefits at your fingertips. Quick little overview of some of the resources and benefits we have available for you from tools and technology inside the MLS you may not be aware of, things that may save you money, things that may help your marketing, things like that. We have a lot of programs and platforms that you may not be aware of that we offer you. So quick little overview on February 29th there. Coming up this Wednesday at 1 o'clock Eastern Time, NAR is hosting a webinar, Broker Power Hour, Market Trends to Watch Out For in 2024 with Jessica Lotz, the head of NAR VP of Research. So really great webinar there, and we'll drop the link in the chat over the course of this webinar for you to register there. But a good one to watch for out there, 1 o'clock on Wednesday. And then also coming up February 13th and 15th through the 15th, 9 a.m. to 1:30 every day, we have a webinar with 6 CE credit hours. Over the course of those 3 days, you get 6 CE credit hours, but you get your real estate negotiation expert certification course. So please sign up $200 for that course to become the real estate negotiation expert certification, and you'll get the 6 CE credit hours there. Also, this Thursday at 10 a.m., we have a broker focus session, critical conversations from our critical conversation series, which is talking about the DOJ lawsuits and compensation stuff going on with Kimberly Allard. And you probably have heard me talk about this. Maybe I've come to your office. Maybe you've heard some of the sessions I've done in person or virtually around this. I've been updating you on kind of what's going on, but Kim's going to talk to you about how to manage your business around this. And for the broker session on February 1st at 10 a.m., going to talk about what changes in your office policy you may need to be making and other things related to that. And then the agent session next Thursday at February 8th at 9 a.m. As well with Kim. So the broker and the agent session, here. If you can't make the broker session, your broker or manager, feel free to make the agent session as well. So, but this is going to be a good precursor to get you warmed up for more training around the new world of buyer agency moving forward. And then we've released our 2023 Cape Cod Market Report. It's available at capecodrealestatestats.com. It's in the annual report section. We have printed copies as well, so you can call our office or email our office to Julie Robillard, and then she can get you some printed copies if you'd like some as well. But we have our 5-page market report there out for you. Let's talk a little bit about that market report for a little bit for some talking points. So our change from 2022 is 15.9% down in new listings, 15% down in pending sales, 18% down in closed sales. Kind of what we expected. In fact, I would actually say it performed better than what we were expecting. I think we kind of predicted, I did, a 20% decline in closed sales and only had an 18%. And one of the numbers I would point out here that I thought was really fascinating was, look, our new listings was down over 850 or so new listings we were down, but then we were down only 780 sales from 2023. So you can actually make the case that the market performed better in 2023 from the standpoint of how much percent of closed sales to new listings as you did in 2022. So I thought that was really interesting that it had about 100 better in closed sales of new listings. So with the lack of new listings coming on, the closed sales really kept up, even with the decreased kind of what we feel decreased buyer demand from the mortgage rates and everything else going on in the world. Other interesting thing to look at, I like looking at these two charts next to each other because without thinking about it, it looks opposite, right? So our inventory was actually down from 2023, but our month supply is up. Why is that? Because those closed sales were down, and so that demand, that buyer demand, this is really what measures that buyer demand decreasing at some level, is that month supply of inventory, of how much it would take, how long it would take to buy up at the current pace of sales, the available inventory. Now I would say, like, look, we're at 1.8 here. I mean, 2019 we were about 3.9, which is double. However, more than double, but healthy market around the country, 6 to 9 months. So even pre-COVID, we were way below on inventory, even though we had those 1,700 homes for sale. And now we're down at the 506 at the end of the year. So really, what we know is a little bit, the month supply of inventory is tricking up because of slower buyer demand, but inventory of homes still is low, really low, with those new listings way down. A couple things I want to point out about towns. Only towns to see an increase in new listings from 2022 to 2023. So more homes came on the market in Orleans, Wellfleet, and Wareham than they did in 2022. So those are the only 3 towns to see that. And the only 2 towns to see an increase in number of sales were Orleans and Truro. And obviously, if Orleans is having more new listings, then it probably had more sales too. So Orleans and Truro are the only 2 towns to see an increase in number of sales from 2022 to 2023. And then the other thing I've been talking about is kind of look back at 2018, 2019 levels, and I want to talk about, this is the volume of real estate transacted in Cape Cod and Islands MLS in Barnstable County for residential from 18, 19, 20, 21, 22, and 23. So, you see that curve. We were at a $2.8 billion mark in 18 and 19, moved up to a $4 billion mark in 2020, 2021, and we knew that couldn't last, and so we were down to 3.6 billion in 2022 and then 3 billion in 2023. And I only point this out to say, look, back at the other slide, when we were way down in closed sales from what we saw in 2018, 2019, we still are, $200 million more in closed transactions, and a lot of that has to do with the price of the properties. So the amount of real estate and the impact on the economy is still great, even in down sales years, because we're still did over $3 billion worth of sales. And so I think that's something to point out too, is that the cumulative amount of money out there is still greater than it was back in 18 and 19. All right, and that's what I've got, and I want to bring in our first guest of the day, because we've got a couple coming in. I want to bring in Charlotte Green from the Cooperative Bank of Cape Cod to talk a little bit about what's going on in the mortgage world. So, Charlotte, how are you today?
I'm doing great, Ryan. Thanks for those stats. I'm excited to dive into that report a little bit more later on today.
Yeah. So what are you seeing in the mortgage world? I mean, overall, obviously 2023 was probably the worst year in a couple of years for mortgages. But what are you seeing out there, and how are you talking to clients and your loan officers about what's going on there?
So it's certainly been a volatile year for interest rates. People are expecting them to go down in the very near future. We're having conversations around timing. Is this the right time for you to buy or sell? If you have a life need to do that, the interest rate shouldn't be your deciding factor in putting off important life decisions. And there's always the opportunity to refinance down the line if and when rates do drop. So I did put together a couple talking points I wanted to share with everyone, just regarding some insights on the market and rate predictions for the coming year. Really starting out with a little background over the past few months, focusing on recent and upcoming meetings of the Federal Reserve, aka the Fed. Really interesting, Ryan. Last time we met and I had this talk with the zoomed in attendees, we were right on the precipice of a Federal Reserve meeting. And here we are again. They're meeting a little later this week. So it's going to be interesting to see what comes of that meeting. And I just want to kind of boil down what's happened in some of the future ones, what's happened in the past, and what's going to be happening or anticipated to be happening coming up. So the December Federal Reserve meeting and November economic reports indicated the economy was moving in the right direction and the Fed would be cutting rates in 2024. Great news. Indicators showed that increased rates had been making headway in curbing inflation, which was signaled by things like lower employment rates and lower consumer spending. At that time, the mortgage rate market responded really favorably to that news with an estimated 50 basis point or half a percentage improvement in the mortgage rate pricing during that time. The release of the Fed minutes from the December meeting indicated rate cuts are very likely in 2024, noting it may be necessary to keep those rates at elevated levels if inflation does not reverse course or if numbers were to significantly soften from the numbers reflected in that December meeting. So notably, committee members increased their projected rate cuts in 2024 to 3 from the 2 discussed in the September meeting initially. Then we saw December jobs and production reports released in January, which did show a softening in mortgage rates, and the market worsened due to that news, causing a slight increase in our mortgage interest rates during that time. What we've seen over the past few weeks has been reflective of a consensus that rate increases, aka the tightening cycle from the Fed, is over, with some people anticipating rate cuts in early 2024. Now, while the Federal Reserve Committee members increased their prediction for the rate cuts from 2 to 3 in December, Wall Street experts are actually predicting 6 rate cuts in the coming year, which is great news for mortgage rates. Typically, those rate cuts are done in 25 basis points or quarter of a point increment cuts during the year. So those 6 cuts would total 150 basis point, but some experts are predicting up to 175 basis points in rate cuts, with the first cut being pretty aggressive at the point, maybe 50 basis points. And just as a side note, when I refer to those rate cuts, this is the federal funds rate, which helps dictate market changes as a whole, including mortgage rates. And this is done by the Federal Reserve, who meets 8 times a year. So experts in just economic forecasting are predicting the Fed to hold rates through these next 2 meetings. So the first taking place this week and the next taking place March 19th and 20th, with our first really heavily anticipated and expected rate drop happening in the April into May meeting. So just in time for that spring market, right in the height of that spring market. Some are predicting we won't see those cuts until September, but with this being an election year, the majority is predicting we'll see rate cuts much sooner. Just as a point of reference, the federal funds rate is currently at 5.5%. And when all is said and done, we're projected to see the federal funds rate at 3.75 to 4%. So what's next? And what does this mean for all of you? All in all, most industry experts are expecting the rate market to start turning in mid to late spring. Mortgage rate drops are going to be incremental once they start, with economists at Fannie Mae predicting slowing economic growth in 2024 will bring them rates down to around 5.8% for a 30-year fixed by the end of the year. Most experts are anticipating a full percent drop in mortgage rates overall from where we are today to where we land. So that would put us a little bit lower than that 5.8 predicted by Fannie Mae. And we're likely to see drops in those conforming loan rates before we see those jumbo rates begin to fall, just based on traditional market trends. Now, what does this mean for buyers and sellers? Those getting into a house now at a higher interest rate are going to beat the market in terms of home prices, which are certainly expected to rise once the rate market turns. So those buyers today can take advantage of refinancing to lower their monthly payments and take advantage of lower interest rates when that time comes. And for sellers today, there are far less homes on the market now than there will likely be this spring. And with the heavy demand we're seeing for housing in the Cape Cod market, sellers are still able to command a really premium price for homes they are listing now. So just let you all know that the mortgage team here at the Cooperative Bank of Cape Cod is here to help your buyers get to the closing table without a headache, despite what the market might be doing, and to answer any questions you or your sellers might have about what's going on in the market and what's anticipated to happen in the next few months to year.
Yeah, Charlotte, a couple things. The new conventional loan limit was raised starting the first of the year. So do you have that in case people are not aware of what the new limit is on that conventional loan limit?
I sure do, Ryan. It was raised from 726,223 to $766,550 in 2024, and that is that loan amount. So it's not based on the purchase price; it's just based on what people are financing. We actually have a great program that we've been utilizing to help people get into the conforming loan amount, because right now we are seeing slightly more aggressive rates in that conforming arena than we are in the jumbo arena.
So how are you able to kind of do that and get those people in there?
What we're doing is we're piggybacking a home equity line of credit along with their first mortgage purchase to kind of, we call it a jumbo buster in the mortgage industry. So to help finance a portion of that money, rather than saying increase your down payment, we can keep that same down payment and just put an equity line of credit behind the mortgage to get you into that conforming loan amount.
Nice. And yeah, so because I mean, even with 5% down, you're talking, almost $800,000 of purchase power right now, even at minimum down payments, with that new conventional loan limits.
Yeah, I mean, they're big purchase prices we're seeing. So to ask people to get into that, 20% down, we know that most buyers don't have 20% to put down. So we wanted to take a look at what we could do to help people take advantage of the market turning sooner than later.
Awesome. And any other programs the Coop's rolled out that you're really proud of that you want to highlight?
Yeah, certainly. So earlier in 2023, I should say, we did roll out some great programs to help do our part with the housing crisis here on the Cape. So some really great affordable, low down payment, reduced interest rate programs for people relocating to the Cape to work for a Cape-based employer, people who have been living and working on the Cape for the last 12 months, and or all of our hometown heroes, which includes people in the public service, our teachers, our nurses, our doctors, firefighters, first responders, police, EMT. I won't go through the whole list, but we did not leave anyone behind.
All right, great. And so I just want to thank you for all that. And how can they reach any of your guys? I'm sure most of them have their favorite local Coop lender originator already, but in case they don't.
Yeah, if you don't have someone you love working with over at the Coop, just check us out online, mycapecodbank.com, or shoot me an email. I'd be happy to make an introduction to you to someone on our team, because our folks are just so passionate about helping people and working with our local real estate community.
All right, and we thank you guys for everything you've done. You really are creating products that are needed in the marketplace as the market continues to evolve on the Cape.
Well, thank you, Ryan, and thank you all for trusting us with your buyers and your sellers. Have a great rest of your day.
All right, and I want to bring in our next guest, Johnny Schreiber, the MAR Regulatory Counsel of the Massachusetts Association of REALTORS. He's going to update you on probably quite a bit of things that have happened on Beacon Hill and also in the regulatory scheme in our court system as well that impact Cape Cod. And so, Johnny, welcome in, and you've been here plenty with us. So I want to thank you for taking the time. You're always available for us, and thank you for fitting us in your busy schedule with legislators back in session on Beacon Hill. You can kind of wrap up some of the stuff they did last year and what they're taking on this year, and some other important updates our members are going to want to know about.
Thanks, Ryan. Yeah. So, and for folks who don't know me, Ryan gave a great introduction, so I appreciate that. But so I work for you. I work on our legislative, regulatory, judicial issues, advocating across all branches of government for our industry. There's been actually a lot of, as Ryan kind of teased, some really interesting things going on that impact the Cape, I think, very directly. And so I'm going to run through some of the stuff that we worked on. Please feel free to put any questions or comments or thoughts into the chat or the question function. Happy to pause at any point or, at the end to handle questions, as well as I'm always available if you want to reach out. I can put my contact info in the chat as well. It's on our website. Feel free to call me, email me anytime. I'm happy to have one-on-one discussions, talk to your office, anything. So introduction.
Yeah, please use the Q&A function, and I'll be watching out and stopping Johnny along the way as well as we can. And then some questions I might hold till the end as well. So please use that Q&A function right at the bottom if you got anything for Johnny.
Awesome. Thank you. Turning to kind of what's going on here, I'm going to take a little bit of a look back first. Just generally speaking, we have, I think we're best known for our legislative advocacy, and we are in the middle of a 2-year legislative cycle here. So we had the first year last year, and now we're kind of in the home stretch as we enter 2024. So last year was actually a pretty remarkable year for real estate in terms of our advocacy. I'm going to cover some of the biggest issues. So first of all, you probably heard about rent control. There was a ballot question that was filed on rent control. It did get approval from the Attorney General and ultimately failed to get the signatures required in order to be on the ballot. So that came and went. However, I do think that it is very likely that it will come back as a ballot question, likely for the 2026 election, which means that you'll start hearing more about it probably in the spring to fall-ish time period of 2025. So keep an eye out for that. We certainly learned some lessons. I'm sure the proponents did as well. So that's something to keep an eye on. Crumbling concrete foundations, quarry testing. I know that's not an issue that has thus far impacted your area too much, but if anyone participated in our Realtor Day on Beacon Hill, thank you all for coming. We usually get several hundred realtors who come to the State House and talk about our issues. If you're looking to mark your calendars, it's going to be on June 10th this year, so I hope you'll join us for that. And I think this issue is a real demonstration of the power of that event. This issue impacts central and western Massachusetts right now primarily, whereby there's some quarries that are using tainted concrete going into foundations, which causes them to crumble and possibly for the homes to collapse. So huge problem, and we were successful in getting this provision into the budget last year, where there's some additional funding for homeowners to get their homes tested, and there's a new licensing and testing provision for quarries to make sure that they can no longer sell tainted aggregate into the marketplace, which means we'll have basically a stop date as of July of this year when we know that no more tainted aggregate is getting into the market. And that's going to, A, make sure that homes that are built in the future are safe, and B, help us to better understand the universe of how many homes are actually impacted, because we're just sort of at the start of this issue. And so that was one of our priority issues for a day on the Hill in June, and it was included in the budget in August. So I think a really great demonstration of the power that you all hold when you speak with one voice and go to the State House on behalf of our issues. In 2023, we also had a historic tax relief bill, the first tax relief bill in Massachusetts in 20 years. I have a list here of a lot of the really good housing stuff that was included in that bill. I'm not going to talk about all of them, although if you have things you have questions about, obviously feel free to ask. Some that I'll point out to you: good landlord tax credit allows municipalities to adopt provisions giving property tax relief to landlords that are providing below market rents. So to encourage that practice, we had a doubling of the tax credits for lead paint abatement. Septic system repair and replacement tax credits were doubled and in some cases tripled. The Housing Development Incentive Program, which creates market rate housing in gateway cities, had its backlog funded at $57 million, and its annual cap tripled from 10 to 30 million. We had the estate tax exemption was increased from $1 to $2 million. Short-term capital gains rate decreased 30% from 12 to 8.5%. In the budget, we saw significant housing funding increases, and several of the regulatory issues, so that's before the executive branch, not the legislative, were related to issues in your area. We worked closely with Cape and Islands as well as some other local associations in helping out with those. So one of the big ones where we were involved in sort of several pieces of this was the Holtec dumping of contaminated wastewater in Cape Cod Bay, which we've successfully staved off to this point. And the other was the nitrogen sensitive area regulations, which are new, and we were submitted a couple of rounds of comments on them. I think our comments were heard. One of the biggest changes that were implemented as a result of them was when the regulations first came out, they required basically if you were in a designated nitrogen sensitive area and if your town didn't get a permit, there was homeowners would be required to upgrade their septic systems. And at that point, when the regulations first came out, there was a 1-year look back period. So if you had upgraded your septic within the last year, you didn't have to do it. But if you had updated it 2 years ago or upgraded 2 years ago, you would have to face the $30,000-$40,000 plus upgrade fee. And thanks in part to our comments, that was increased to a 10-year look back period. So significant.
And that look back, in case they don't get it, is only if you've already put in an IA. I want to be clear about that because I think that confuses some people. Even an existing IA would not have been allowed, except in that 1-year look back period.
Right. So that's a huge difference, which makes it a lot easier for people to be able to comply should we get to that point, and hopefully we won't. So it's good to see that when we work with Cape and Islands that our voices heard.
And this is where I think our advocacy from the state and local levels kind of match, right? We've got a really good wrap up on our website of where towns are moving forward with their wastewater permit, with their watershed permit, and now transitioning into really strong advocacy to make sure towns get a watershed permit in order to make sure homeowners don't have that upgrade requirement.
Yeah, you guys do a great job on the Cape. You're super involved in your towns, and it makes a huge difference. So on something like this, where we can sort of work together when it's before the executive branch on the regulations writ large, and then you guys take over and do the work locally to make sure that towns are doing the right thing. So it's an awesome partnership. So I mentioned kind of where we are in session, right? We're entering this this second year of a session, which tends to be a busy time, especially as we get towards that July 31st, which is the end of formal session. We also have the budget process, which is an annual thing. However, it looks a little bit different this year as revenues have slowed significantly for the state after about 30 straight months of going beyond sort of the benchmarks and expectations. Over the last few months, things have significantly slowed. So we saw the governor's budget just came out earlier this month, and over the next several months, that budget will work its way through the legislative process until we get a finalized budget. And sort of overhanging everything that happens at this point in the session is that elections are coming up. So it's something that we're always keeping a close watch on and tends to kind of pump up some of the political issues that are going on. So a quick look at the FY 2025 budget included the last couple of years. These are several housing assistance line items that we track. You can see that over the last few years, they received significant funding increases, far outpacing the increases in the rest of the budget. A lot of these programs kind of proved their worth during COVID, and they were highly effective. They got, during that period, a lot of additional funding from the federal government, and the state, I think, recognized their value and did all they could to try to increase them and backfill that federal funding when they were able. Now we're seeing this significantly different revenue picture, and so the growth is significantly slowed, at least in the governor's proposal, that roughly a 4% increase overall, and that's kind of what you're seeing across the housing assistance line items. And most notably, in outside sections of the budget where there's policy pieces, the governor proposed an expansion of the Title V tax credit to allow for them to be applied to sewer connections or upgrades of your system, which is something that we've been pushing for a little while now. And I think it makes a ton of sense, especially as we mentioned the nitrogen sensitive area regulations, right? If you have a system that is functioning, you wouldn't be allowed to get a tax credit for an upgrade. However, should this pass, which will be supportive of hopefully getting across the finish line, you would. So if you had to upgrade your system because of government regulations, you would have some assistance from the government to do so in the form of these tax credits.
And Johnny, we're running into that. You know, you and I have talked often about this big issue that we're running into is, as boards of health, I know in Bourne and Falmouth and West Tisbury and Martha's Vineyard have started to require at transfer passing Title V to upgrade to IA systems. As we're starting to see that, you know, some of those boards of health are like, oh, well, they can have the tax credit, and we're like, no, they can't. And because that right now, a passing Title V, even if the government mandates you go to IA, doesn't qualify for that tax credit.
Exactly right. It's only for basically for failed systems right now, which is kind of feels a little bit like an oversight. So I'm hoping that this will correct that issue and encourage folks to have more access to upgrade their system if they want, and or to apply to sewer connections. So looking at some of the policies that are going on in the state right now, I would say this is kind of a rough view of kind of an index of things that we're looking at. I'm not going to go into detail on all of them, but if you've seen headlines lately, I'm sure, especially in your area, right, transfer taxes are a huge and very controversial issue. They've been proposed by several local communities, especially ones on the Cape, and there are also some bills that would authorize them statewide. The most recent one being the governor's housing bond bill. That's kind of her omnibus housing bill that has kind of a wish list of things in it. We're supportive of several aspects of that bill. It includes over $4 billion in a 5-year bonding for housing, which is great to see. It's a significant increase over past iterations of this bill. It also has statewide authorization of accessory dwelling units, something I know a lot of Cape towns have already tackled, but we're thankful to see it be proposed statewide. But it does include a transfer tax, which is a policy that we have a lot of concerns about. And we have raised those concerns with the legislature. There was recently a hearing on that bill where we testified, and I think it's likely there'll be another couple of hearings as it works its way through the legislative process. Couple other issues on here. Home equity theft is a practice that was recently declared unconstitutional by the U.S. Supreme Court. Massachusetts is one of a dozen states that has this policy whereby cities and towns can basically take your home and sell it and keep all of the equity if you have unpaid debts to the town. And so that's been deemed an unconstitutional taking. The courts and the state right now are kind of struggling with what is the best way to fix that situation. So we're part of those discussions, as you'll see further, both in the judiciary as well as before the legislature. And home energy scoring is an issue that's been around for a long time, keeps kind of popping up every few years. I think it's likely that there will be some sort of climate resiliency bill, and that will be talked about as part of it. We have shared our concerns with that type of policy, especially in Massachusetts, where we have some of the oldest housing stock in the country, and houses are likely to not do particularly well on that we think the sort of time, energy, and resources of programs should be put towards actually incentivizing homeowners to make upgrades to their home to increase energy efficiency, rather than just providing them sort of a report about their home that doesn't necessarily then lead to any action. So this is kind of a dense slide, but I wanted to include it because, as I mentioned, we do work across all branches of government. We've increasingly been engaged with cases before the courts. And so I think we have one. I'll get more into a case after we're dealing with short-term rentals, but wanted to touch on some of the other cases that we're working on. So you've probably heard about MBTA communities. It was a law that's been pretty controversial. It requires 177 communities in Massachusetts that are served by the MBTA to increase their zoning with some more dense zoning allowed near their transit nodes. There's already a couple cases pending on that, likely to be some more as we hit some upcoming deadlines. The most notable one being that 130 communities need to create that zoning by the end of this year. So we're watching several cases there.
And for us on the Cape, the MBTA communities law will require Bourne to do about 800 multifamily units by right, and Wareham to do about 900.
Yeah, so it touches the Cape a little bit. It has a very broad reach in terms of the number of towns. It's more than half the state. So and it's proven pretty controversial. Although at the first stage, which happened at the end of last year, all the towns did ultimately comply. So I mentioned home equity theft on the prior slide. There's a couple of cases dealing with that right now. The courts have actually asked for our assistance in a couple of them to sort of say, hey, how should we handle it before we get any legislative fix? So we've been working in sort of in that arena, the judiciary, as well as trying to come up with changes for the law to bring it into compliance with the U.S. Supreme Court ruling. And as I mentioned, a couple of short-term rental cases. So moving on to that, basically really brief history here. You probably all know it well. So there is a state law that regulates and taxes short-term rentals. That was enacted in very late 2018 with regulatory process going through in 2019. And then a lot of municipalities have put forth further regulations, further taxes as they're allowed under that law since then. In 2021, there was a case called Stiller versus Linfield, which had some kind of damaging language, but not so much in its decision, more so in what's called dicta, which is basically just sort of extra language from the court that doesn't necessarily carry legal precedent, but it can be useful. And so the court basically put forth in that case that they had concerns about short-term rental uses being allowed under just sort of basic residential zoning definitions. And as a result of that, we are seeing that pop up as a challenge to short-term rentals in several cases. On the prior side I listed, there's one that's gotten a lot of press out of Nantucket that is going on right now. And there's another case that is started a little bit more recently called Balzer versus Mashpee that deals with several other issues. And this argument was kind of thrown into that case. Notably there, the court actually asked for interveners to basically make the case for short-term rentals. That's not a typical kind of procedural move. We think it's likely that they felt like the parties to the case who kind of only had interest in maybe their short-term rental, but not short-term rentals writ large, and the town, which may, support short-term rentals today, but not tomorrow, depending on the political winds, weren't necessarily the best parties to represent them. So we did file to be interveners after consultation with Ryan and folks in your association. And so that's where things stand right now. Basically, our filing is in. We are the only party that has filed to be an intervener. And again, the court requested them. So I think there's a very high likelihood that we will be accepted, but acceptance has not formally happened yet. Being an intervener basically would make us a party to the case. So we would be subject to the oral argument briefing schedule that the court would put on. And our goal would be to create positive precedent, kind of maybe push back on the Stiller case, demonstrate the long history of short-term rentals in Mashpee, and hopefully create some better precedent going forward to show that short-term rental uses are indeed residential uses under zoning. So we've got some funding lined up. We had our Government Affairs Committee approved $25,000, and our Executive Committee approved up to an additional $50,000. So that's where things stand right now. And we've been doing some outreach to other people who are involved in the industry to try to see if we can work with some other experts on this issue. So that's all my slides. And if folks have questions or want to discuss anything further, happy to do so. And if not, always feel free to reach out to me, and I'll put my contact info in the chat.
Awesome. And a couple updates I wanted to mention to people. If you have questions, start putting them in Q&A for either me or Johnny on whatever issue that we talked about today. But one thing is, I've been getting a lot of questions. We had Kate, Johnny's counterpart, Berard, on in November talking about the litigation updates, stuff like that. They have produced Form 310, which is the addendum to the offer. If you need to request if your buyer needs to request additional compensation to pay a buyer's agent from the seller, that should be in the forms libraries. If it's not in your forms platform library, reach out to myself or Marcia Sterling on our staff, and we'll try to get that taken care of. But I just want to update that it's now Form 310. It should be live out there. So if you need that, let us know if it's not in your forms library. So thank you for that, Johnny. A couple other things that we'll be having going on in the Cape. You mentioned the primaries and the generals. The Cape's going to undergo some legislative delegation changes too. So you've got Senator Sue Moran, who's running for a different office, and will not be running for re-election. She has announced, and then our longtime 20 years, I guess now, on the state representative Sarah Peak, who's in House leadership, not running for re-election as well. So we'll see some changes on the delegation as well, probably going forward.
Yeah, time to change.
Yeah, and on the Cape, I mean that's a big loss with Representative Peak, because we've had a lot of longevity and influence through her role in the House too on the Cape delegation.
Yeah, for sure.
And she's been a strong advocate for realtors lately. So yeah, I'm sure you're seeing that around the country too, around the state too. I mean, is there going to be a big election year, you think, going on, or are y'all anticipating that?
So I mean, I think that anytime you have a presidential election year, there's things are kind of ripe to be shaken up. Haven't seen necessarily as much movement as like in a concentrated area like on the Cape, where it seems like things are shifting right now with legislators, or there's several kind of making moves. But yeah, certainly it can be unpredictable, right? And so we'll keep a close watch on what's going on with the election. Did want to mention with short-term rentals as well, the governor also recently proposed what she's calling the Municipal Empowerment Act. She proposed it at an MMA event and recently, and the proposal includes the possibility of increasing taxes on hotels and short-term rentals. Would allow municipalities to charge an extra 1% tax. So that's something we have concerns about, given that the industry's been hit pretty hard the last couple of years. And also, we just implemented extremely high, potential at least, taxes on them a couple of years ago.
We were higher than the 6 they're already collecting.
Yeah, so they would allow municipalities to collect an additional 1%. So certainly something we have concerns about. We were successful. So there was something called tourism destination marketing districts that the state enacted in 2021. And when initially drafted, that had proposed taxing short-term rentals as well as hotels to fund these districts that basically sort of put out materials and talk about why people should go there. We were successful in getting short-term rentals carved out of that. We'll see what happens with this one. I think we have strong concerns, and I think others do as well. I think we're the revenue picture is putting everything in a tough spot. Governor trying to propose something to get some more revenue, but don't think that's the answer.
Yeah, on the revenue picture for the state, how does that kind of looking? They're expecting a downturn. Is that it? The kind of stalled revenue collections?
Yeah. So all during there was a big jump in revenues sort of after an initial drop during like the start of the pandemic. Then revenues kind of took off like on a rocket and just kept going for a long time. I think it was 30 months was the sort of beating projection, like every single month. And throughout that time, there were a lot of voices saying this is not sustainable, this cannot last. And I think we're just seeing the sort of things returning to reality. And I think the projections are that, we'll be okay. I mean, the state has a lot of money set aside. They have a huge rainy day fund. They did a good job, I think, of managing during the boom years, but some would say that is maybe easier. It's easier to manage things when you have a lot of money coming in. So we'll see what happens. In the governor's budget proposal, I believe it was about $1 billion of it she proposed from sort of one-time revenue sources, but didn't touch the rainy day fund. We'll see what the legislature does with that. I mean, also they'll have a bit more in that theirs comes later, so they'll have a few more months of seeing revenues come in and seeing where things land.
Awesome, thank you. And then I would say, so that, because that's interesting, because like one of the arguments on transfer tax that at least I've heard a lot of people say is really appealing is the idea that how much more are you going to tax these sellers, right? When they're already going to be hit now, a lot of them are going to be hit with the millionaire's tax, the new millionaire's tax, right? You got the capital gain side of things. So especially with the lower thresholds, they're getting hit with a lot of tax already.
Sure. Yeah. I mean, that's always an argument we make. There's a lot of transfer taxes getting thrown into the market create a lot of problems. And I think it's they tend to decrease the number of homes that are for sale, right? People put off selling. They decrease market movement. They have the potential to decrease investment in that banks are less likely to lend to developers. So they're, I think, far more likely to exacerbate the problems we're seeing across the real estate market.
What do you see as the outlook for that housing, that housing bill that the governor's proposed that has transfer taxes in it? It's got a lot of different pieces that some groups oppose, some groups support, right? It's really varied on the reaction to it, isn't it?
It is, yeah. I would say from what I have seen, there's a lot of support for different groups. I think everyone has found at least something they like in the bill, right? And that's the beauty of a bill that is broad and has a lot of different pieces in it. So I think it's very likely that the legislature will pass something. I mean, just time-wise, I think they'll do something of the bonding because we're at the limit of the 5 years. And I think it's very likely there'll be a significant increase there. So that's great to see. More funding for housing is wonderful. And I think there's a lot of opportunity for some of the housing pieces. I know Cape and Islands commented on a seasonal communities designation that was included in the bill, which I think is another fascinating piece. I think you can kind of see from some of the policy things that are happening, the administration is trying to, and this makes sense, right? For a long time, we always talk about, real estate is local, right? And I think the administration is trying to find solutions that can work for regional or more locally tailored solutions than sort of some things that may be more heavy-handed and statewide. So, there's a lot of potential in some of the policies there. And, we'll voice our concerns for the ones that we have concerns about, including transfer taxes.
Yeah, thank you. There's two big provisions: transfer taxes and the inclusionary zoning change to 50 simple majority. As well. So that definitely are two things that I know there. So good question, because we already have the highest like excise tax on real estate in the state in Barnstable County. Someone asked, is transfer tax the same as tax stamps? So from the excise tax that the counties already collect, and you talk about a little bit about the difference, right? This is a different kind. Right now, our transfer tax goes to fund county government and some of that operations of county government on the excise tax on real estate. And this is a different tax, but levied kind of in the same vein, right?
Yes. So there are several different proposals for transfer taxes. Some are basically local bills where municipalities are asking the government for that taxing power. Some are statewide enabling bills where the government would just say, hey, municipalities, if you want, you can do this, and within some bounds. The one that's gotten the most play is the one that's included in the governor's bond bill here. And the way that one operates is it's basically on homes that are over $1 million. Any amount that is over $1 million, right? So you take out that first $1 million, will be charged 0.5% to 2% up to the municipality, and the funds from it would go towards creating affordable housing. So different the local bills have different proposals. Some are tied to affordable housing, some are not. Some are just would go to fund local government. So, but the way transfer taxes get talked about, I would say the most of the time at the state level is with a tie between taxing housing to pay for more housing, which is something that we think doesn't make a lot of sense.
And the important thing too is thinking about is in terms of is it out of the proposal in the housing bond bill, is it on the buyer side or is it on the seller side? Out of proceeds type thing, right? So where's the tax coming from? Is the buyer going to be expected to bring it up front?
So the way we always the issue with that is
The money's going to, I mean, it's going to be baked into the cost, but the question is, I think,
right.
does the buyer have to bring it up front or not?
Right. So and we all know, right? And so they're different of these bills have different proposals. Some say it goes on the buyer, some say it's paid by the seller, some say it's split 50-50. At the end of the day, the market dictates, right? In a hot market, this is going to be forced to be on the buyer because home prices are going to go up. In a lesser market, these will be put on the seller. Either way, you're picking winners and losers, right? It's either coming out of the buyer, making the cost of the home more expensive, or it's coming from the seller, stripping them of equity, right? So I think the proposal here is that it would come from the seller. That's the way most of them are. I think because the concept is the seller is flush with cash when they make the sale, but it would be reflected in the price of the home.
Yeah, absolutely. Well, I was thinking the difference between whether they have to bring it up front or not. That's the question too, right? So okay, great. Thank you for that. And Johnny, thank you for taking the time. I know your email's in the chat. If anyone has additional questions, they can reach out to you. And we always love people being efficient and want to thank you for giving us a ton of information on an efficient side. I did want to reminder people highlight, if you go back and watch this on the side, the estate tax and the short-term capital gains tax rates changed, right? So in that tax bill, Johnny glanced over it, was something I hear most about, especially in our low inventory world, where we have a lot of houses that are not equipped to sell to year-round home buyers or anyone else right now, and need a lot of work. The investors come in and fix them up, and then on the short-term capital gains side, that tax cuts down, and the estate tax, the raising that threshold to 1 to 2 million, plus only starting to tax, I believe, right after 2 million instead of the full boat after 1 million. That was a huge issue I've heard a lot about over the years in our region. So thank you for your work on all that stuff. Thanks, Johnny, and thank you, everyone. Have a good day.